So the pressure on the euro is back on the downside since the market broke back below recent neckline resistance around 110.50, and the focus now over the short term is on a retest of last week's low, which comes in around 108.20. A break below 108.20 would expose next support at 106.60, which guards against that critical 12-year base from earlier this year in March at 104.62. At this point, rally should be very well capped into the 110.50 area, while ultimately only back above the high that we saw on the 22nd of May around 12.10 would take the immediate pressure off the downside. Sterling dollar. So cable has done a good job trading off that recent 2015 high at 158.15, and the medium-term downtrend remains firmly intact. At this point, next key support comes in at 50.89, while any rally should be very well capped ahead of 155. A break below 150.89 would open the door for a more accelerated decline down towards a retest of the 2015 low, which comes in at 145.65. Dollar yen. So dollar yen has done a good job of accelerating to the top side since breaking out above key resistance in the form of that multi-week, multi-month range high at 122. The break above 122 now opens a measured move into the 125 to 130 area over the coming days, with any setbacks now expected to be very well supported into that previous resistance at 122. Euro Swiss. So despite recent setbacks in Euro Swiss, the market has been showing signs of basing over the past several weeks with a 102.35 low in play. At this point, look for a higher low above 103 or for the market to hold above 103 on a daily close basis in favor of the next upside extension beyond 105.25 and back towards that February high, that range high or that recovery high at 108.15 further up. Aussie dollar. Aussie remains locked within a well-defined downtrend with a medium-term lower top now looking like it's in place at 81.63, which will be confirmed on a break back below that yearly and multi-year low from earlier this year in early April at 75.33. A break below 75.33 would open the next major downside extension towards the 70 area further down. Dollar CAD. So dollar CAD looks well on its way back towards bullish resumption since basing out at 119.20 several days back, and the market looks poised for a retest of the recent yearly high and multi-year high at 128.35 further up. A break above 128.35 would then expose the 2009 peak at 130.65. At this point, any setback should be very well supported into the 120 area or ahead of 120. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, with this market breaking down below critical support at 71.76 in the previous week to confirm a medium-term lower top at 77.44 and open the next major downside extension towards the 65 area further down. At this point, any rally should be very well capped ahead of 73. SPX 500. So the S&P 500 continues to show signs of topping since posting record highs the other week at 21.37. Look for a break and close back below recent lows at 20.99 to confirm and open the door for an acceleration back towards 20.40 the further down. At this point, only back above 21.37 would negate the bearish outlook. Gold. So gold continues to show signs of putting in a material base down at the 1131 area, with the market now being well supported on dips towards 1170 and looking for the next major upside on a break back above recent highs that we saw at 1232. A break above 1232 would open the door for an acceleration back above 1300, and at this point only back below 1170 would compromise the basing outlook for gold.